The American President Joe Biden has sought to reassure banking customers and markets after a week of uncertainty. Two American banks, both worth hundreds of billions of dollars, they used to be, because they've now collapsed, forcing the government to step in. Let's go to Chief Investment Officer at the Motley Scott Phillips. Scott, good morning to you. Goes to show just at the end of the day, without proper regulation in America, how fragile the banking system is.
Pete, good morning. It's a tough one as it feels like afternoon, mate. It's been a long couple of days. It's a really tough one because you're right. The mistakes around Silicon Valley Bank, yes, they were made at the bank over the past couple of months. The reality is the regulators allowed SVB and other banks up to $250 billion to be exempted from some of the tougher regulation that was signed into law by President Donald Trump in 2018. Now, you do it then, you say, see, I've made a change, I've improved everything. 5 years later, here we are carrying the can. And you're absolutely right, mate. This is one area, we talk about too big to fail, and it's used sometimes as a pejorative, sometimes as a summary. The simple reality is it's not that any individual bank is too big to fail, it is that any individual bank can cause system contagion. And we know what that's like. We've been through the GFC. So, yeah, it drives me slightly mad, can I say, that regulators said, oh, let's make credit a bit easier. Let's try and, unlock the growth in the banking sector, et cetera, all those euphemisms that basically meant let's hope they don't screw it up. I've got to say, mate, you put enough people in a room for long enough, someone's going to make a mistake, someone's going to screw something up. That's exactly what happened to SVB. This is, it's not Silicon Valley per se that caused this problem. It's the Silicon Valley Bank is what it's called. It's just a fundamental mismanagement of the very simple treasury functions of a bank, matching your durations, hedging your risks, all those really, I won't say simple things because they're not simple to do, but they're very simple to understand. This is banking 101. SVB got it wrong. The regulators simply weren't there. Partly, maybe they didn't do the right job, but almost certainly the regulations themselves weren't enough.
Yeah, and Janet Yellen, she tied herself in knots to explain to the American public that this wasn't a bailout, but it is, to an extent anyway, a bailout of the venture capitalist community. Mm-hmm. But in the end, they had no choice. They had to do it, didn't they? Because what came next, or what would come next, would be a lot worse.
That's exactly right. And in fact, as we speak this morning, the US market's just closed. The US banking stock index was down 10%. So while we talk about a bailout and stopping contagion, as long as there's no more pain, it's also worth saying too, mate, a bailout in itself doesn't make the shareholders whole. Probably almost 100%, if not exactly 100%, of the value of those shares will be wiped out as a result of this. So you bail out the depositors, you keep the loan book alive, you basically make sure the system doesn't turn in on itself, but it doesn't save the shareholders. So we talk about banks being saved. What we're really talking about is the depositors being saved. In this case, as you say, there was VC funds. There was a crypto-based or crypto-focused bank on the East Coast. There's also having the same treatment. This is to keep the system alive. The shareholders will walk away with almost exactly zero, if not literally exactly zero. The key thing here is to bail it off the system, and that's almost the point. So, and it's required. Had it not happened, we would have seen the banking sector down massively today in the US. We probably would have seen more bank runs. We probably would have seen more bank closures. And then, like during the GFC, the credit freeze, the global credit freeze we saw in 2007, 2008, that is the big contagion risk. We certainly don't want to go through that again.
Finally, and I've got to be quick here because I've got to move on, Scott. I mean, what's interesting here, and I read about this morning, this is the first bank failure in the social media age. So panic, so much of the panic came from that.
And that's exactly what contagion is, right? But the problem is, as we know, the speed of the internet, the speed of social media, as you rightly point out, it just amps that up. People try to take $42 billion in deposits out of the bank in one single day once fear took over. And once they started those withdrawal processes, that's the traditional bank run, albeit in the social media age, a digital bank run, it still has the same impact.
Scott, good to see you. As always, we'll talk to you again soon.